All right, time for the trade day recap. Wednesday, October 1st. It's the Wednesday before non-farm. So, yeah, let's dive in. As you can see, where is it? Right there, right there. Break even on the day. And I'll go through what happened, what I did wrong, what I could have done better, and those kind of things. Starting off with the bias. So here's yesterday's candle, Tuesday. Here's today's candle. And I saw the note here, reversal candle. I saw this as a potential for a reversal candle. It did not close above consequent encroachment, let alone the high here. And while it was a bullish closure, I saw it as a potential iffy sign. Not quite sure what was going to happen. And then in London, overnight, price came down and took these equal lows and was down in here. So let's go down to the 4-hour. So what we can see here is that the 4-hour 2 a.m. candle, I was thrown off a little bit down here to some extent. This 4-hour candle took liquidity, came down to the internal range, which is what I wanted to see. So here's a bullish breaker on the 4-hour, comes back down, tests the inversion, and there's some lower time frame liquidity down in here that it took, but we're on the buy side of the curve. One thing that I missed is that I saw this as a bullish candle. However, it did not close inside the range of this previous candle, so that was kind of threw me off a little bit. And then what we see is the 6 a.m. candle here. So I was assuming the damage was already done when it came down into this liquidity, which right here on the 1-hour chart. So this fair value gap is what it wanted overnight, came back down. It created an early market structure shift, which is a 1-hour closure above this inversion, created a change in state of delivery right here on the 1-hour. So I'm assuming bullish delivery going into this morning, which right here, this 9 a.m. compression candle. This one threw me off again, which happened, I think it was yesterday. Or was it Monday? I forget. Yesterday. So this 1-hour candle. Now, zooming in a little closer, what I saw was a London low of the day. And London had come into that internal range of liquidity. It formed SMT and created a breaker overnight in addition on top of the midnight open. So I saw this is accumulation, manipulation, and then distribution for equal highs up here in this zone. So I was bullish on the day. But yet I got knocked out of my trade. So let's dive into my trade and I'll show you what exactly happened. All right, so here on the 1 minute, the blue line's 9:30. We can see what happened is 9:31 candle created this massive God candle. I'll just throw on my previous drawings to make this quicker. Taking out, so we took the news low, and then this God candle closed above here, forming this nested breaker. So there's a breaker here, there's a breaker here, there's a bunch of different breakers and a bunch of different inversion fair value gaps. And when I've seen this happen before, what can sometimes happen is it just doesn't do anything down in here and it just rips for the targets. So I didn't wait for a retest. I marketed in on this candle. I had enough room for my stop to be way down here because I had enough room for my targets being way up there. And what I ended up seeing, it comes down, it does a retest, and it starts dilly-dallying up in here. And for me, I've been not liking this price action the last couple weeks. So I went to break even because that's just better for me at the moment than dealing with another loss. So I went break even on this trade, which I guess even just speaking about that and why I did that, that was one of my rules for a while, was I was not allowed to go break even on any trade. If I entered the position, I was assuming the risk and I was assuming the money had left the account, and I was okay with that. With the last 2 weeks, I think I've had it's like 6 out of 7 trades have been losses. And so what I'm doing here is, as opposed to just, I'm doing some risk management basically, where for one, I've reduced my risk significantly to still be in the market and still work through this, because it's bound to change. It's not like you just go through a losing streak and it never ends. And even maybe if I could pull it up real quick, I don't know if I have this chart. I'd love to see it here even with y'all. I want to show you the probability. Here it is right here. So let me open this up. The probability of a losing streak. So looking at some of these days highlighted right here, like, isn't this interesting where depending on, so you have a 6-day losing streak, and depending on your win rate over here, so let's take a 50%. There is a 97% chance of a 6-trade losing streak with a 50% win rate. Currently, my win rate is over the last month even declined, somewhere down into 45 or 50 right in here. It usually is more like 55 or 60. 60 probably. But let's just take 50% win rate is a 97% chance. And what's interesting is how quickly it drops to like a 7 or 8 trade losing streak. So it's like I don't want to just stay out because what I've noticed often is once you step out is the moment it all turns around. So, but what instead I'm doing, I'm still preserving my capital by reducing my risk. And one of the other techniques is I'm switching to another account. So that way I at least take the heat off of my funded account that well, they're both funded, but one's in drawdown, so I don't care a ton. And the other is I'm working towards a payout. I actually care. So I wanted to flip that. I wanted to use an account that I didn't care about, because the moment you care is the moment you start making slightly different decisions. So I pulled that layer out too. So we have the market's not moving the same as what I'm used to. My model is not presenting how lately very well, if at all. So I reduced the risk down as low as it gets. I've switched over to a different account that I don't have any emotional attachment to, because let's just be honest, my funded account's in the green. Like, I'm a human and I have some attachment to that. So I switched the accounts, and then this is a long-winded answer, but the break-even part, which basically is I'll allow myself to go back to break-even if price isn't doing what I want it to do. I'm allowed to go break even until the point in time in which I start noticing that going break even is hurting me. So right now, going break even is not hurting me. It's actually helping me. So I got to be aware of that and be ready to switch the rules again, that I'm not allowed to go break even once my trades start hitting and then I get knocked out of them at break even, and they were winners anyways. So that's a part of my risk management that I'm doing currently. But nonetheless, moving on, I got stopped at break even on this one. Came down for this one more drive into sell side liquidity a little bit lower. And at that point, I saw this setup over here, but I didn't trust it. Yesterday was seek and destroy, which is basically where you just get price that starts taking out highs and lows continuously, kind of like this, one way or the other. And it just doesn't really... these candles print emotions, and trash traders, they don't print money. Now, it's rare that you get 2 seek and destroy days in a row, so I accounted for that, but I also wasn't confident enough. And oh wow, power just went out. Laptop's still on, still recording, don't have any screens going. All right. I don't even care. I'm not going to edit that out. So I did not enter in on this trade over here. I just didn't feel like it was confident enough in it, given the price action lately, but it ended up being a banger. So I'm gonna annotate that for future reference, and just take this day by day and learning lessons day by day, and I'll be able to take that information and figure out like what I should do differently. Maybe it's just sitting on my hands. Maybe it's just waiting, and price will return to moving the way I expect it to. It's just a matter of time. So yeah, today's NFP Wednesday, which means technically Thursday, is a super low probability day. I have seen setups on Thursday, so I might watch price and demo trade, probably live stream if I do. But I'm not going to be taking a funded trade tomorrow. And it's just part of my risk management this week, super light, because I know that this is a low probability week for sure, combined with the low probability, the difficult time I've had the last 2 weeks. So it's all about risk management for me right now, and which is fine. I almost feel like, I was thinking about this today, like I almost feel like God has been testing me, with this exact situation because things were going so well. And then I was presented with a test. And the test was, can you preserve your accounts when things aren't going well? Because that's the test I failed last time. And so far, 2.5 weeks in, I'm passing the test. Now, I don't want to say I've passed it because price action hasn't cleaned up and I haven't gotten back into a winning streak yet. But is it said that this too shall pass? I believe that to be true. And I'm excited for the challenge. So I'm going to stop the video here. The internet's back on, which is pretty cool. Take care.